All right, Helene, looks like we got the room opened up for today's Trade of the Day Live.
Oh yeah.
Good morning, Helene. How's it going?
Morning. Good. How are you?
Good, doing well. Yeah, no, it's interesting day in the markets. The last 2 days, we were starting to see some things on the chart, that were, suggesting the pullback was certainly in order.
Mhm.
But again, late last night, right on time, two massively significant companies to the market, both Microsoft and Meta, two of the, famed Mag 7 stocks, right?
Yep.
Reported earnings, and I mean, they just knocked the cover off of the ball, particularly
Mhm.
Meta. I mean, the stock's up around 11, 12% right now. Microsoft's up big on the day.
Huge
Gave a
move.
huge boost to pretty much all the tech sector. And we're gonna dive in a little bit more to that here in just a second. But definitely, gave the markets a little bit of a boost this morning at the open. So that was interesting to see a little reversal off of the pullback that was starting.
Definitely. I mean, we needed that in order to trade higher. We needed, as you said, something above and beyond, and that's exactly what we got there.
Exactly, because both those stocks had really run up, you know, pretty substantially into the earnings report.
Hmm.
And last week we saw the report from Google. They delivered a stellar report, given the current context, about as good as you could have asked for from Google. So that kind of gave me confidence that both Meta and Microsoft could also deliver because they're in pretty similar fields. The three of the companies, when you really boil it down. And they were able, the market had kind of priced them for perfection, for a perfect report, and man, that's exactly what they delivered last night in the after hours. So, I think we have some folks in the room here. I want to just go ahead and give everybody a shout out that's here, Helene, and we can start looking at the charts here. I see some regulars here. I see Cindy. I see Carlos. I see Holland. Welcome in, everybody. So excited to have you here. I see Mary, Joe, Tammy, Clay. Welcome in, everybody. We're so excited to have you all here for today's Trade of the Day Live. And also, real quick, before we hop into the charts for today, just want to encourage everybody, if you have the chat there available for you. We'd love to hear your feedback. So if you have any comments,
Yep.
questions, anything like that throughout today's call, go ahead and post in the chat, and we'd love to interact. I see Carlos just gave us a shout out in there. How's it going, Carlos? Thanks again for being here. Always love to have you here.
Yeah, even if
Um,
your question isn't specific to, what we're going over, any questions, any thoughts, definitely throw them in there. We're happy to chat.
Exactly, exactly. But with that, Helene, I think it'd probably be good to go ahead and pull up our first couple charts for today and
Sounds
start
great.
diving into this. So, Helene, we always like to start off with this one right here. It's really important just to, get a temperature and a read of where the markets are at. And like we said, we had seen a couple signs setting up on the chart, particularly starting this past Tuesday, that we could have a little bit of a pullback starting to take place. And we got that. We got that bearish engulfing bar. We got the confirmation in yesterday's trading session, getting that lower close.
Yes.
And, it really looked like things were teed up to start pulling back even a little bit further from there on the headline S&P. But again, those two earnings reports came in and delivered just stellar reports last night. They're really, really significant. That's, these mega cap tech stocks really linked to the AI narrative right now. That's where the lion's share of the earnings growth, EPS growth is coming. That's where it's coming from for the S&P 500, and so it was really, really crucial for those companies to report some good numbers, and that's exactly what happened. So that's why you can see the market opened at a new all-time high today. So we hit a new intraday all-time high at current levels. If we were to close right here, we are trading above 6,400 on the S&P. That would be the highest close ever. So it's uncertain if we're going to hold those levels for the rest of the day. It's been a pretty wide trading range. And we're going to dive into some of those reasons why here in just a moment. But if we were to hold current levels, Helene, we would be eking out just another new all-time closing high. So that's certainly encouraging.
Absolutely. And, going into today with the setup, it could have gone either way. And, the markets were pricing that in. They knew it was going to be a volatile swing in either
Hmm.
direction, just depending on how these earnings really played out. And so, I think you and I were both kind of holding our breath going into these because we saw what was being priced and we knew it was going to be a bigger swing in either direction, but nobody knows until those earnings really are shared. And so, enjoying that bounce higher today.
Yep, exactly right. Yeah, and we were watching the options market and things like that in the past couple of days, and we could really see, markets and traders that are really kind of starting to tense up heading into those reports.
Hmm.
We looked just right at the end of the close yesterday, and markets were factoring in somewhere, at least for the closing price for today, somewhere, around about a 0.7, 0.8% move on the S&P. So we're pretty close in that neighborhood right now. We've certainly been within that trading range today. They just weren't, it's unclear whether that move is going to be up or down. Fortunately for the markets, stocks moved higher today instead of having a negative reaction on the back of those earnings. We got that positive reaction because the Microsoft Meta reports are just so significant to the market at this point. But just looking at this chart a little bit further, of course, we got the reacceleration to the upside today. But we do still have a great underlying trend still intact. Again, the short-term, medium-term, long-term trends, all well still intact for the headline S&P 500, still making that nice series of higher highs and higher lows, kind of, dancing right along that upper Keltner channel. So still in a very, very bullish run right now.
Hmm.
Of course, we still are in, right now, and most of today's trading range has remained above that upper Keltner channel. There's been a little bit of period where it dipped down below it, but so we're still, in a little bit short term overbought extended, area. But Helene, as we've said, that status can sometimes run a little bit longer than you anticipate. You can
Much
remain
longer
trading,
sometimes.
yeah, much longer. I mean, if you just look at just the past, call it month and a half,
Yeah.
dating back to once we finally reaccelerated, to the new highs in late June. Stocks have been kind of dancing around that upper Keltner channel for almost a month and a half now, spending much of that time trading above it. So, it can be kind of hard to, play this thing day by day, but it's important, I think, to still get a read on it and see where things are. But just looking at the technicals, again, we're still, pretty, priced at a premium right now,
Yes.
for the market. But that's what I'm seeing here, Helene. Anything else you want to point out here before we kind of get into what we're going to talk about next?
No, I completely agree with everything that you've said. And, we're in this tremendous bull run. At a certain point in time, we'll have to see a short-term pullback of substance. But right now, as long as good news keeps coming in, we're gonna keep trading higher, there's until something falls, So definitely just watching closely as we continue this bullish push higher.
Exactly. Yeah. It's, coiled spring is getting compressed a little bit tighter, the more we run up and run up,
Yeah.
regarding whenever a pullback does happen. But, eventually, of course, you will get that straw that kind of breaks the camel's back. But, at this point, we're still, the stocks are wanting to move higher here, even though I think a lot of traders are kind of looking for a reason to sell them off. And that's what we're going to go ahead and talk about next here. I'm going to go ahead and pull up our next chart. And I think this is a little bit more indicative of what's going on in the broader markets here, Helene. You and I,
Mhm.
we were just talking about before we hopped on, in the markets right now, there's really kind of, a tale of two markets that's really going on. Did you want to kind of say a little bit more about what we mean by that?
Sure, yeah. We have been hearing a tremendous amount about AI, and the
Yeah.
market really loves a storyline, a main story to be trading higher off of. And right now, AI is that storyline. Before it had been Mag 7, Mag 7, the story behind them pushing everything higher. And, the market lost that and they need something to be pushing it higher. Right now, that is AI. And so stocks that are connected in any way to AI, they are trading higher, they are bullish. But if you have no connection to AI right now, you're really feeling some pain. And just to even, emphasize that AI strength, around 40% of earnings calls so far, the S&P 500 have mentioned AI. That's how important it is right now in the market, in performance, is that 40% of companies are actually making a point to say it within their earnings call.
Yeah, I mean, that just kind of speaks to it. And, again, we have a long ways to go in earnings season. Probably after last night, that number probably even increased a bit. But,
Yeah.
um, I was doing basic research before hopping on here, just to kind of look at the breakdown of the S&P 500. Of course, we all know that the tech sector, is shouldering a lot of the weight of the overall index. But when you start actually digging down and kind of drilling down to see how much the index is actually comprised of these companies that are directly tied into the AI narrative, your eyes really start to open pretty widely. So I was looking, and just specifically right now, the tech sector. Then you add in also I added in the comm services sector because there's some stocks like Google, like Meta. They're technology stocks. They're in the tech sector,
Yes.
but they've just been classified as comm services, so they're technically in the XLC. But if you add tech sector and just comm services, the two of those together, that's about 45% of the overall weighting of the S&P 500. So just alone there, you have 45% of the overall weighting. Then you start adding in the industrials. Then you start adding in the energy names, the utilities that are all getting a lift and all catching a bid, all because specifically of the AI narrative, whether, it's the tech companies that are, either making the chips to power it, they're deploying AI through programs, to their, a business selling to their customer, providing an AI service. And then you start adding in all the industrial names that are helping to fuel the build out of the AI revolution. And then, of course, the energy names and utilities that are providing the power. There's AI is basically like this giant octopus that it has kind of a tentacle in all these different little sectors. So if you add them all up, it really is substantially over
Mhm.
50% of the total weighting of the S&P 500 that is all being fueled by this AI capex spending narrative. And I mean, frankly, thank goodness, because as we said, there really is a story. It's a story of two markets, because you have everything that's connected to the AI revolution right now, that's catching a bid, that's performing really well. The charts look great, but then you have everything else. You start thinking about the more discretionary stocks. You think about your retail stocks. You think about, just any of these things that really are kind of divorced completely from the
I love
AI
those things.
story.
Yeah.
Like a UPS, like pull up a chart of UPS, when you have a second. I mean, it's horrific looking. So, we do this right here, the chart we're looking at right now. This is a chart of the S&P 500, but the equal weighted index. So you can still see, that we're still in an uptrend. We're making a nice series of higher highs and higher lows. The lower study down here is just representing the S&P 500 number of stocks trading above their 200-day moving average. So it's essentially the percentage of them that are in a long-term uptrend. You can see it's still about 60%, but that's roughly in line with exactly what we're saying. It's really indicating, the kind of tale of two markets. You have, again, everything that's connected to the AI build out. Those are by and large in medium to long-term uptrends, confirmed, and that's what's showing up in this chart right here. But that other 40 to 35%, whatever it works out to be, they're in a real tough spot.
Hmm.
And that pocket of the market, housing too. I mean, gosh, look at some of the home builder charts.
Oh
We're
yeah.
trending up a bit lately, but those and anything connected to the housing sector, building. I mean, they've just gotten punished in the last couple months, and really, the market's been trading higher, but they have not caught a bid, and understandably. And that, Helene, to move on to what we were going to talk about next, we're really focusing on these pockets of the market that are connected to the AI revolution, that have that great relative strength, because they're the stocks where money's flowing through. It's where the interest is, where the trading's happening. But after yesterday, some of those other pockets of the market, really kind of started to take it on the chin. Anything else you want to cover in this one before I hop into the next page we're going to cover here?
No, go ahead and hop into the next topic.
Okay, so yesterday, of course, Helene, you and I, we've talked so much about this week being just jam-packed, whether it be earnings or, economic data releases. But of course, yesterday we also had a Fed meeting too. So you probably
Yes.
heard a lot about this. It's been in the news for numerous reasons lately.
Hard to miss, right?
Yeah, hard to miss hearing about the Fed lately. So it's been the topic du jour of late. But yesterday we had a Fed meeting. They, of course, decided that they were leaving rates unchanged. And in the press conference following the meeting, Fed Chair Powell, he struck a pretty hawkish tone, even though there was a dissent at the meeting with two members actually opting, saying that they should, that they were in favor of actually lowering rates. The committee actually decided to hold them steady. That was the majority opinion. And Chair Powell, like I said, he had a pretty hawkish tone yesterday. So much so that combined with some recent, macroeconomic data, jobs reports continue to come in fairly steady. They're not blowout by any means, but they're steady, showing steady job growth. And we got the GDP report the other day, showing that in Q2 GDP grew, by about 3%. So with all that combined with yesterday's meeting, there's been a substantial change in the number of rate cuts the market is anticipating this year. Coming into this week, the market was still anticipating 2 rate cuts by the end of the year, likely beginning in September. And this chart right here, if you've never looked at this is the CME Group's Fed Watch tool. It's really helpful. You don't have to go and do all the math, looking at Fed funds futures and calculating to see what the markets are saying. This just does it for you. So currently, this is the range that we're currently at. And so it's anticipating markets staying the same. Well, just 1 week ago, markets were pricing in roughly a 60% chance of a rate cut coming in September. Well, after yesterday, after the past couple of days, that has completely flipped. Now the markets, these things do move around a lot, but this is, it's really showing you the sentiment of the markets. They're not expecting a rate cut at all now in September after, the recent GDP report, after yesterday's Fed meeting.
Just makes sense.
So that in particular, for a lot of these non-AI connected stocks, right? They were starting to, get a little bit of a bid, some of them starting to, at least, buoy out and, level out, because there was a narrative that a rate cut was coming in September. That's, the Fed was definitely going to start acting by September. Yesterday, that narrative changed. Now there's significant doubts about whether there's going to be a rate cut in September, and markets are really unsure when the next one's going to come. There's two meetings following that, Helene, the rest of the year. Uh, you, you can see that there's going to be a meeting late October and one in December. But the market's only pricing in one Fed rate cut now by the end of the year. So, for that remaining part of the market, again, pretty tough sledding for them after that.
Absolutely. And I mean, going into this meeting expecting 3 rate cuts, it's a lot for the market to digest a shift like that. Even though I think people were starting to see that maybe we weren't actually going to be getting 3 rate cuts. I think, looking at the data coming in, it would be fair to start making those assumptions and pricing some of it in, but still negative news for the market broadly. It takes a minute for them to digest that and start pricing it in.
Right, exactly. Because whether debate about whether a rate cut is merited or warranted or not, totally separate thing. If you were to get a rate cut, stock market obviously generally going to react pretty positively to that across the board. But you start seeing that start to get priced out of the market. Some of these AI players, that's really not a significant mover or shaker for those type of stocks. They have that part of the economy is absolutely white hot right now. But the other parts, not so much. And, so after yesterday's, developments, really kind of, tough news for them. And that pocket of the market is really starting to take it on the chin. And that's why you're seeing today in the equally weighted S&P 500, just to go back to the chart before, that's why you're seeing an extension of that sell-off and pullback you're starting to, see form there. So kind of under the surface, in those weaker pockets of the market, you're starting to see that part of the market, the breadth there, start to tail off again. Again, anything that's still connected to the AI build out, even the financials are still, showing pretty good relative strength, but, specifically those pockets of the market connected to AI, are still there, they're carrying the load for the market. They're carrying the team. They can't have the team on their back, so to speak, to use popular saying there. But that, Helene, is we're still focused squarely on those pockets of the market showing really good relative strength that are connected to the popular narrative. That's where the story is being told in the market. And that, is where our trades for today are actually going to be found. So, Helene, I think now would be a good time for me to go ahead and hop into my trade.
Go for it.
Folks, you probably remember last week if you were here or watched the replay of last week's session, we talked about Google after they reported earnings. We said this was the day following their report right here. They had this massive spike up. We were on the call. They were trading well outside of the upper Keltner channel. They settled a little bit closer to it near the end of the day, but I said on the call, I was like, hey, Google just reported a fantastic quarter. They're a little overheated right now, but this one is on my buy list. I'm watching this
Yeah,
one like a hawk, watching it closely, waiting for a pullback into a more favorable pricing, based on the technicals. And today we got exactly that. So you can see, the stock, it's continued, making a nice uptrend ever since then. But today we got a pullback. You can see the stock is currently trading just a touch above 192. It's well within that upper Keltner channel, so it's no longer overbought. Of course, the technicals on the trend lines are still looking great. We can see our 21-day EMA is still trading above our slightly longer term there, 63-day EMA. Of course, that buy signal originated back in late May when the stock was starting to reaccelerate off of those lows. But so you can see the stock's making a really nice series of higher highs and higher lows. Great trend line buy signal there. And now in today's pricing, this pullback is offering us a little bit more attractive opportunity to get into this stock that, again, just delivered great earnings. It's right at the heart, of the story that is showing really true strength in the market right now, being the AI narrative. And so, again, that's also being replicated down here in our RSI chart. You can see it, was showing it was substantially overbought on this 5-day RSI, the short-term RSI right here for the past week, but it's pulled back now. Again, just a touch above 54 right there. So the trade that I found is it's actually a call option debit spread. Again, given that the market's, kind of going into some tougher seasonality right now, historically more of a choppy period for markets going into August and September.
absolutely.
Still want to target, these really attractive areas showing the good relative strength, but, considering maybe a little bit more cautious approach right here. So I landed on a call option debit spread for Google, specifically looking at the September 19th expiration. So this is, about 2 months out. The August 15th is getting a little close. It's only about 2 weeks. So, I just extended this out to the next monthly expiration. But I landed on these two strikes right here. So this is, a good bit in the money. It's a 5-point spread, but I'd be looking to buy to open the 175 and also simultaneously sell to open the 180 strike call. And so again, this is a 5-point spread. I would look to get filled here on this trade at 4 points or less. So that way I would guarantee that my trade would have a 25% profit potential or better. So you get filled at 4 points on this 5-point spread. That would guarantee that you would have that 25% profit potential. It's been kind of dancing all around on both sides of 4 points for the last 30 minutes. So I'm going to go ahead and submit my order at 4 points. I have a good feeling it'll probably get filled by the end of the day there, but we'll watch that one and see how it does. But that was my trade for today, Helene.
I like it. I like it. And Google had been kind of a laggard up until just a couple weeks ago. I mean, I think people weren't really even paying attention into it too much because even though it was clearly
Yeah,
off of those April lows compared to some of the other stocks, like the momentum just hadn't really picked up yet. And so, leading into their earnings, we started to see that pick up. And now clearly they're pushing in now. And, it's still fairly early in this momentum play as well, because, we're just starting to see that ramp up in July. So
exactly.
great entry point, Google, everyone loves Google. I have to say, people want to see a trade higher.
Yeah, I mean, it's kind of like you were saying earlier. The market, one of the things that really can power stock prices and price action in the market sometimes is a story or narrative. Obviously,
Yeah.
at the end of the day, earnings, over the long term, the market's, a weighing machine instead of a voting machine. So ultimately, earnings do end up winning out. But, in the medium term, the narrative on Google was not all that good, particularly until they had this recent earnings report. This recent report they had really kind of shifted pace on that. But as you're talking, the Mag 7, that had really started to lose steam. It
Oh,
really
yeah.
isn't the Magnificent 7 anymore. It became the Mag 6 and then the Mag 5, then the Mag 4, and then now it's the Mag now it's the Mag 5 again because Google's now getting some participation to the upside. So the kind of Mag 7 conglomerate is kind of really broken down. It's not really what
Yes,
it was a couple years ago, but you're starting to see a ramp up in the price action in this one. A much more favorable entry point today as opposed
definitely.
to about a week ago. So I thought it was a really attractive setup.
Yeah, I think it looks great. Well, I'm going to go ahead and jump into my trade now.
Yeah.
Also in the AI storyline, looking at Palantir. So Palantir builds software platforms that help governments and enterprises integrate, analyze, and act on massive data sets. And they do all of this using AI. So they are one of those big names within AI. They've been an outperformer for quite a long time. And let me go ahead and share my screen
Yeah,
here.
while you're doing that, Helene, I don't know if you happen to know this off the top of your head or not, but I think I know at least earlier this year through end of Q2 at least, Palantir was the top performing stock across the entire S&P 500. I mean, it's just had a rocket ship move higher. So
Oh,
I
yeah.
don't know if that's still the case. It very likely is because it's kind of continued its run, but this one has been just showing some incredible strength. So
Exactly.
great,
And
great
resilience
trade here.
too, about on top of that, just the resilience of this trend. So looking at the chart here, we can see that it's on a killer trend. It's making a strong series of higher highs and higher lows. We see I have a couple of different moving averages here to confirm the trend. So the 35-day EMA confirming that shorter term momentum trend. As we can see, Palantir is trading above that level. Additionally, we have the 200-day moving average confirming that longer term trend. Palantir is well above that level as well. So confirming the bull trend, confirming the buy signal. And then over the last couple months, it's been, as I said, making a series of higher highs and higher lows, consistently making new 52-week highs. Actually, today it made a brand new 52-week high, came off of that high a little bit. So, but we're seeing just tremendous momentum and a reacceleration of the bull run after that early July, late June quick correction for Palantir. I remember this time people started saying it's going to the ground from here. They want there's a group that just
Mhm.
wants performing stocks to not perform. And I remember hearing those voices at that time. And instead, what we saw was a reacceleration of that trend. And so the momentum is still clearly there, still trading higher. They do have earnings coming up on the 4th. And so because of that, I'm looking at a debit spread, a nice conservative
Sure.
debit spread. Over here, I have the August 29th, so 1 month out, and I'm looking to do the 140 and 145 strike spread. This would protect me down to break even of 143.53. So looking at the chart, 143.53, that is just above that lower counter channel. So a tremendous amount of downside protection there, which would allow me to ride out anything that happens with the earnings. So if they were to underperform, this gives me a tremendous amount of downside protection on the trade to still potentially profit and be able to ride out a steep correction if we were to see one. But this also takes advantage of the time value that we see right now in the options because of the earnings. So debit spreads make their money off of the time value portion of the options. So when we have earnings or volatile different market conditions, we see more time value, we see higher profit potential in these spreads. So it's a 5-point spread. I'd like to get in below 4. Right now, it looks like it's around 350. I'm going to go ahead and just do 355 to try to definitely get in to the spread. Sometimes you go a little bit above the average between the bid and the ask to make sure you get filled. And at that price, I'm happy to pay an extra $5 to get into this trade. So I'll go ahead and just let it do its thing and see if I get filled today.
Nice. Awesome. Well, that really like the trade, Helene. I mean, that looks like a great setup. I mean, like we said, Palantir, it's been on just a crazy run higher this year.
Oh, yeah.
Just one of probably the best momentum stock of the year to date. I still think, to my knowledge, it's still the best performer across the S&P 500 index. So that's really impressive. is still continue to carry that banner running out front. So, I think it's a really smart play too with earnings coming up next week. I'm sure there's probably a big move being priced in. I'm not sure what it is off the top of my head, but I'm sure it's a pretty substantial move. But the chart looks great, trend looks great. Having a nice non-directional position like that, I think is really smart. So great looking trade there.
Thanks, I appreciate it.
Yeah, absolutely. Well, folks, we're just about done with today's session. But one thing before we go, I want to go ahead and mention this, that if you really liked what you saw here today, I actually have a personal newsletter of mine. If you haven't checked it out yet, it's called the Weekly Profit Opportunity Newsletter. I'm actually going to go ahead and drop a link in the chat right now. And if you haven't checked it out, I have what I think it's a pretty great deal. You can actually try out your first month for just $1. You're going to be getting how it works is I send out a video newsletter. I do a lot of research over the weekends, kind of similar to how we did today. I get a lot more in depth in this newsletter though. I talk a lot more specifically about the company, a lot of different things about why the setup is really one of my favorites at that point in time in the market. And I send out a little video newsletter, send it to all the members on Sundays in preparation for the stock market open the following Monday. It has whatever the trade setup is that I've spotted that looks like a really attractive trade opportunity. So, if you go ahead and sign up for that $1 your first month, you'll get 4 trades. I've had a very strong success rate in those trades lately.
Oh yeah, you have a lot of winners.
Yeah, I want to say something. Well, I need to go and do the exact check here, but I want to say it's about something like 25 out of the last 26
That's
have given
awesome.
members the opportunity to profit on them.
That's
Again, can't promise future success, right? We all know that there's no crystal ball in markets, but it's had a pretty great track record of late, and so if you even get a few of those trades to continue to work out for you, it'd easily cover that dollar for
yeah.
just checking it out. But I just put that link in the chat in case you want to go ahead and check it out. I'm doing all that research on the weekends, spotting those opportunities, sending you everything about the setup, exactly how I look to enter the trade, everything like that in preparation for, the market open on every Monday. So would really like to see everybody check that out. Again, it's my own product, so a little biased here. I think it's a really great newsletter, but just want to go ahead and put that in the chat. Give you all the opportunity to go ahead and check it out at the great discounted deal for that first month we currently have it for. So
yeah, that's an amazing deal. I mean, $1 for the first month, it does not get better than that.
Yeah, exactly. Yeah, pretty good deal there. And like I said, if you like seeing how Helene and I spotted these trades today, we're doing the same type of analysis, but even more so, giving you more details, more things about how we would actually look to manage the trade. So, some really key information on top of that included in that newsletter there. So, with that, Helene, I think that's about all we had for today. Some interesting stuff still to, finish out the rest of the week. We have a big jobs report tomorrow. I know markets will be really keyed in on that one, seeing how that and the unemployment rate, all the things, as a part of the, jobs report, whatever, everything that's included in it. So definitely still have some market moving things the rest of the week. Of course, some big earnings coming in the after hours today. I believe it's Amazon and Apple are up next. So some big movers still yet to go, but good week thus far. It's been constructive. So we'll see if we can keep building on it.
Yeah, sounds great, Blane. Well, I appreciate everyone so much for being here. We absolutely love having these sessions with you all, and we'll be back here again next Tuesday.
Yep, absolutely. And real quick, I see a question from Jerry asking about the newsletter, if it will be available starting approximately August 19th. Yes, Jerry, yeah, you can, yeah, exactly. The offer will still be available. So yeah, if you want to hold off and sign up around mid-August, that's totally fine. Yep, absolutely. We'll hold it open for you. But anyways, everybody, thank you so much for being here. Again, we really appreciate you joining us for these TOD live calls. We have a great time. We hope you enjoy them too. Hope you get some benefit out of them. And we'll look forward to seeing you all back here on Tuesday.
Yeah, sounds great. Everyone,
Right.
have a
Take
great
care,
weekend.
Helene. Great job. See you. Have a great weekend, everybody.